I be in the zone, gazing at the walls, depressed, digging the phone. They take it personal, but only a mind of you could understand what a nigga feeling. 41st till I die, motherfuckers. I'm still braving you for blood, so we full bread. You ain't my dog, trying to infiltrate the clique issue. I can't get you into that on a later note. We overdose every day to death, we so close. I'm trying to tell these cats, but I let them do their thing. Ready for the bad news till the phone ring. Son is dead now anyway, over my head. Seeking revenge, son, bitch, son. On your behalf, trying to laugh out the drill gun. Conceal guns, play the hum. Real sons.
Hello, testing. Hello everyone, welcome to another live stream. So give me 1 second to check if everything is working correctly. I had some issues with my audio. Looks like it's okay. So I hope that everyone is doing well. Let me open my chat. I do have my chat open on the side. Let's minimize this, and yeah, so everything should be working properly. Big day today, quite a lot of information. So hey Jason, what's up? I decided to switch the live stream from Thursdays to Friday because yesterday we didn't have such volatile events. We had the ADP non-farm, we had unemployment claims, and we had the ISM services PMIs. While today we had NFP, unemployment rate, and we had the, basically earnings, NFP, unemployment. So what happened? Wait, was this? So let's just refresh. What happened? Well, basically, if we go to NFP, it was a miss. So the number was a miss. The actual number came in much lower than the forecast. So the revisions were okay. The revisions for the last time were pretty much on point or a bit higher. But what we are looking at is the forecast was 75,000. And the actual number came in at 22,000. So that's a big miss. As far as the unemployment rate, it is right on the forecast and it increased a little bit. So the last number, the previous number was 4.2. From July, we have increased. So July was 4.1, August was 4.2, and now September is 4.3%. So the jobs market is deteriorating. The jobs market is suffering from possible restrictive interest rates. So let's check if my Edge Finder has been updated. US. Let's check it out. I don't think it's gonna be updated yet. Fifth. Yeah, it is. It is okay. So we have NFP and we have the unemployment rate. So pretty much, you can see this is the current reading for the US dollar, very bearish overall. See, so most of the data is coming out more bearish than expected. Stock market as well. So let's also check out the Fed watch tool. Fed watch tool. Let's see. So for anyone that doesn't know, this website gives you the probability of a rate cut happening. Okay, so this gives you a probability of a rate cut happening. As we can there is now 100% chance of a rate cut. it measures the options market, and through the options market, it tries to find the probabilities of rate cuts. So for September, rate cut 100%. For October, probably a rate cut once again. For December, probably a rate cut as well. Let me see, 350. Yeah. So I think so far we have priced in 3 rate cuts. So we had 2 rate cuts priced in. Now we have 3 rate cuts priced in. And this is, of course, for the Fed, so Central Bank of the United States. What is the reaction to the markets? So what is the market reaction? Let's see. So I have my watch list. Nasdaq, gold, silver, euro dollar, euro GBP. Stock market looks to be a bit bearish on this number. S&P as well. Pretty interesting stuff. So the stock market seems to be losing some value, which is normal. You would expect the stock market to suffer because if the US economy is contracting, that is bearish. But then there is another impact where rate cuts are expected, and rate cuts are bullish for the stock market. So the conclusion is that this NFP number is both bearish and bullish for the stock market. But looks like the first reason is more important. Looks like the first reason is more powerful. So because the general US economy is contracting, because we're getting a poor NFP print, the stock market is suffering a bit here. So it's down. Gold and silver should benefit the most. So gold and silver should absolutely benefit the most from this data. Let me also check TLT. TLT is up, okay. Yeah, so basically gold and silver should benefit from this data because rate cuts are bullish for gold and silver. Rate cuts are just bearish for the DXY. Rate cuts means more money in the markets, more printing, more inflation. And to battle inflation, investors are going into gold, into silver. Hey Youssef, what's up? Hope you're doing well. If you guys have any questions, any chart requests, make sure to put them in the chat. We may have a bit less viewers today because I usually stream on Thursdays, but I thought this was going to be more interesting. I mean, if I opened the stream yesterday, it would just be very quiet. So there would not be much to talk about since most of the news happened today and the markets were just super flat. So the markets were just super flat, waiting for that news. Maybe not gold, but things like Nasdaq just flat, euro dollar flat, most currencies just flat. So that is what I generally am referring to. Yeah. Out of this story, the things that will benefit the most, as I mentioned, gold and silver. That can be seen on the chart. That is definitely reflected on these charts. Euro dollar is moving up as well. Quite a big candle today. So Yusuf says, hope you're doing good today. I'm doing pretty well. The NFP print was interesting, so it came in lower than the forecast, which spiked some volatility, and volatility is always fun. So volatility is always fun to see in the markets. Yeah, nice push on the euro dollar. This is the trade that I have running. Now it is attempting to break out of this sort of flat range that has been forming ever since, I would say, the 7th of August. So hopefully it does break to the upside. Will I keep holding this trade? I'm actually looking to maybe take off this position if we reach the highs. So I'm actually considering that sort of an exit from this position because the reaction on the euro dollar and the euro GBP once they took these trades has not been the best. It has not been really explosive. It hasn't had a lot of momentum. It has kind of ranged around, which is not a good sign of a healthy trade. So I might sell a rally. I might get out with a take profit. If I do that, of course, for the guys in the A1 Discord, if you're in the A1 Discord, you get my signals. If you're in Zentum Trading, you get my daily forecasts where I talk about exactly the positions they have. So yeah, if you're in one of those two trading communities, you're going to get updates about these trades. So I'll definitely mention if I get out prematurely. Yusuf says, what are your thoughts on the DXY, especially how it wicked on the 4-hour time frame? Let's see. So the DXY, yes, of course, we would expect a bearish reaction. So let's check out the 4-hour chart. Well, I mean, we are now at a key level of support. So you would definitely expect some sort of a reaction. This is a key level of support. So this is a key level of support on this 4-hour chart. Do you think it might go back to the high of the range? Possibly. That is what I'm kind of maybe even afraid of for the euro dollar. Is this news enough for the dollar to lose value? I think it actually is, because it was a pretty weak print. So I think it actually is, because it was a pretty weak print, and maybe people were thinking that it was going to be somewhere around maybe 60, maybe around 70, but 22 is really, really low. So maybe even more rate cuts are now expected. That means we could see an even lower DXY. Although this is a crucial level of support, so no one really knows. You know, maybe we push through it. So maybe we push through it, maybe we don't. I think the probabilities are actually a bit better for a push through the support level. Maybe not today, maybe next week. You also have to note, Forex Factory calendar next week is PPI inflation, CPI inflation prints. So you have to notice that we still have some prints before the 17th of September meeting. And this Fed Watch tool is going back and forth. So we had just one rate cut, then we had 2 rate cuts, then we had no rate cuts, then we have now currently 3 rate cuts priced in. So it's all over the place. Personally, I would not go like super high risk on dollar pairs. I would still be patient. I would still wait the story out. We got a crucial number today, which does confirm the bearish USD story. Okay, so it does confirm the bearish USD story. But I'm waiting a bit more. You know, I'm not crazy slapping on positions on the US dollar. Let's wait it out a little bit. Going back to the daily chart, if we do continue on this path, if inflation comes out not as high, or if inflation comes out on target, so let's check it out. Do we actually have rising inflation? Let's see CPI. Second. Okay. We had someone begging for money in the comments, so I had to remove it. Okay, so CPI, core CPI. Let's do core CPI. Open it up. You can see the previous numbers. If you don't want to use the Edge Finder, this is a completely free option. Just look at Forex Factory, look at the trends, actual numbers. So it's rising. Inflation does seem to be rising. Let's check out the year on year. Rising as well. So inflation is rising. It's above the 2% target. You can also look at the Edge Finder if you want. So let's see. US inflation, CPI year on year, USD, see, rising. And that's really not good for rate cuts. So I would like to see maybe this number stay the same next week, or I would like to see it go even lower. That would be great. That would be bearish that would definitely be bearish for the US dollar. Do I think the USD is gonna tank? So do I think the USD is just gonna do this? No. But I think we can reach some lower levels of support. So I think we can reach 96.5. That is what I'm writing in my market analysis and in my forecast. So 96.5 does look interesting. It does look good to go to this level. What does that mean for my trades? Well, euro dollar, maybe it goes back to the high, to this one. That is also why I'm considering taking this position off, getting out of this position at that high, so placing a take profit. That is my general analysis for the euro dollar. Let me just check something. So If you guys have any questions, of course, chart requests, put them in the comment section. My Euro GBP trade, it's being steady. You know, it's steadily climbing higher, I would say. So trying to push through. Let's check out the UK economy. What is the UK doing? We actually had retail sales today, came in better than expected. Services PMIs came in better than expected. Manufacturing came in lower than expected. But overall, the UK is getting some better numbers than expected. So that's really not good for my position. The reason why I entered this position, and I thought the reaction was going to be quicker, the reason why I entered was I was expecting a stagflation scenario in the United Kingdom. Okay, stagflation is very, very important. And how you can filter for stagflation, you can see the GDP. You can look at the UK all over the place. You know, so it's bad GDP. It is unemployment that is rising. You can see GBP. So rising unemployment, it's kind of going up there. So kind of moving higher. Inflation, GBP. Inflation rising as well. Whoa, damn. So it's pretty high actually. Came out, did it come out for September yet? No. So we had in August, we had the print. Basically, that is the worst thing you can have for a country. Stagflation. You can see what, let's say, you can ask ChatGPT. You can ask Grok AI. Tell them to list you the countries currently facing stagflation. You'll find a lot of interesting stuff. But the UK is the number one sort of fiscal sinner. You can call them a fiscal sinner, where all of the numbers are coming in pretty bad. And that makes the central bank confused. That doesn't give the central bank a lot of power to cut rates or raise rates. And overall, it reduces the demand. It reduces the demand for the currency. So reduces the demand for the pound. That is why I entered my initial position on the 11th of August. And I thought we were going to have a quicker reaction. We didn't. And now the data is starting to come out a bit better for the GBP. Let's see. Heat map, UK. So the data is starting to come out better than expected. That is why I would actually sell a rally. I have my take profit set around the 0.873 level. And I'm going to get out this trade for a win if it's going to be possible. Let's see. Hopefully we do hit this level. So Yusuf says, DXY is just a bit confusing at the moment. I also don't like how on the weekly time frame it's having a big wick on the upside. That's why I even closed my UJ trade. I'm not comfortable with buying the lows of the DXY range. Yeah, so did you have a UJ buy or a UJ sell? Let's see, USD-JPY. I'm actually looking at the USD-JPY because I am bearish. I am bearish on the dollar. I just need some confirmation. And I am bullish on the yen. You know, maybe the Bank of Japan is gonna hike interest rates. I still need to do some work on that. I still don't have a conclusive, definite opinion on it. And when I look at the technical analysis, it looks kind of flat in this area, okay? So for me to sell, I wouldn't like to see a breakout out of this level. So I would like to see us break these lows. Break this support level. Now it's starting to maybe happen. We got a fat red candle. And I think we could see further downside. I think we could hit this level, let's say. Just a bit lower, like this. But we would first need to break out. So if we do break out of these lows, I would consider a sell setup. It would be more of a long-term fundamental play. The swaps would be pretty rough, I think. The swaps will definitely eat me up on this trade. Let's see. So this is a handy-dandy thing. Carry trade scanner. And here you can see USD-JPY. You get paid swaps when you buy, and you pay for swaps when you sell. And it's pretty high swaps. Okay, it's pretty high swaps. That's why I don't like this trade a lot. I wish I had access to options. That would enable me to reduce my swap exposure, but we work with what we have. So I short UJ from the top of the range. Okay, so you're shorting from here. Nice, cool, okay. If you can tell me your reasons why I know why you're short on the dollar, but why you're long on the yen, maybe we can see if we have a similar view. So if you want to put it down, why do you like the yen to go up? That's a pretty good position if you manage to sell at these levels. What I would personally do is maybe take some of the position off when we reach these lows, and then if we do break out, you can trail. You can trail your position. You know, you can have some targets right here, right here. So you can definitely have some. Targets in mind. But the crucial part is we need to break out of this support level. Could that happen? Well, yes, it could, especially if next week we get a low inflation print, or if we get an inflation print that is not concerning, then we could see this chart go down even more. And then also on the 17th, if the Fed really commits to cutting, and if they want to cut aggressively, then that is definitely possible. Although I think there are some better plays out there in the markets than UJ right now. As you can see, I have my alert set, so I'm keeping an eye on this currency pair, but not touching it right now. Okay, so let me check on the bonds market. The bonds market is actually doing pretty well. The yield should be going down. Yes, it is. It's heavily going down. So rate cuts are expected. Let's see the 20-year bond. Now, I'm sorry, this is a bit of more advanced stuff. If you want to look at the bond market, I know a lot of you guys don't care, don't want to look at it. But for trading, it's very important. So what you need to ask yourself, what does the US government want? They want the yield to go down. They want the price of bonds, which is TLT. That's a tradable asset. Most of you guys will have exposure to TLT, where you can buy or sell this asset. It represents the price of the bond market. And yeah, the US government wants the price of the bonds to go up and the yield to go down. So it looks like the 10-year is going lower, which is good for the US government. They want cheaper debt. So they want lower rates where they repay the debt. The 20-year is going lower. Let's see the 30-year. 30-year going lower as well. So rate cuts are definitely expected. Especially today. Wow, crazy price action on bonds today. And this is called a long end. Let me teach you something as well. When someone says, when someone talks about the bond market, they say the short end, they mean the 2-year, 5-year, 10-year. When they say the long end, they mean the 20 or 30-year, maybe even the 10-year. So the short end is highly correlated with the Fed interest rate, but the long end is completely controlled by the market dynamics. That is why it is super tough to predict what the let's say 20-year is gonna do. But looks like it's doing okay. Looks like it's doing what the US government wants it to do, and that is going lower. Yusuf says, I'm not long on yen. I'm trying to use the DXY confluence on EU and GU when the opportunity arises. I'm currently bearish on yen at the moment. Okay, so Yusuf is bearish on the yen. Let's see the JPY economic heat map. The numbers are coming out generally more bearish than expected. Okay, so that is interesting to see. Let's check out JXY, which is the same as the DXY, but just for the yen. So it measures the strength of the yen relative to other currencies. Okay, that is what the JXY is doing. So how does it look, and why is it important? Well, you want to look at these two charts. If you're trading Forex, these two charts are going to be very important. Most likely, anything that you're trading in Forex is going to be paired with either the US dollar or with the Japanese yen. That is just how it works. So if you know what the dollar is doing, if you know what the yen is doing, or if you have a good idea, you can place some nice high probability trades. For example, right now, the most bearish currency, in my opinion, is the pound. That's my top pick. While the most bullish currency for now, well, could be the euro. I think the euro, as it stands overall, is one of the most bullish currencies. Bullish currencies. If you ask me why, we can look at the GDP for the euro, which is coming out okay. Nothing to write home about, but it's positive. If you look at the unemployment, I think it's steady. So it's not climbing. It's actually falling. Okay, unemployment is falling. Nice. If you look at inflation, I think it's below target. Maybe. Let's see. Actually, right at the target. So inflation is perfect. That's good. That's healthy. That's a sign of a healthy market. So that's why the euro right now is pretty strong. Let's check out the yen. JPY, and this is just an analysis to assess what is going on. What is the trend doing in terms of fundamental data. So inflation is falling. Looks like it's falling. Looks like it's stabilizing. Unemployment, JPY, let's see. Steady. Unemployment is doing okay, and the GDP for the JPY is probably not going to be the best. Yeah, kind of all over the place. You have mostly positive GDP, but you have some negative as well. Euro looks better. The main thing about the yen is possible rate hikes coming in the future. So possible rate hikes. Technical analysis, this is flat. This is flat in my opinion. I think we could go up if we do get those sign of hikes, or if we get some better data. We could go up maybe to this level, this level of what is it, resistance, this swing high, maybe even these ones over time. We're gonna have to see. Right now, I do think there are some better opportunities out there in the markets. So I need to see some more data for the yen. Pretty much similar picture as on the DXY, as on the dollar index. So if you're wondering about the stock market, Nasdaq, S&P pulling back today, actually created all-time highs and then pulling back. Nasdaq, I think it's a similar story. So not yet at all-time highs, but very close to all-time highs, and bearish for the day. I am looking for Nasdaq for buy setups. So I would prefer to get in this one than into the S&P. These levels are okay. This support level and this one, I think we are a bit overextended right now. I think we are due for a pullback. So I would like to see that. I do have my alerts set. Why am I focusing on the Nasdaq instead of the S&P? Because S&P is loved by everyone. S&P is a great investment. S&P moves up over time, but the Nasdaq is even better. So Nasdaq moves even more. Nasdaq is even more volatile, and the Nasdaq is impacted by artificial intelligence. So we all know about the artificial intelligence revolution. It's going to be similar to a dot-com bubble. It's going to be similar to, let's say, a housing bubble. So it's this new thing. It's going to revolutionize the markets. It's going to make companies spend a lot of money. It's going to make companies take on a lot of debt. And it's going to push the stock prices higher. Now, is it going to pay off? Will the companies actually make more money long-term over time? We'll see. I don't think they're going to make as much as they believe. So it's going to be a revolution, but it's not going to be such a huge revolution as people anticipate. So people tend to overhype, overestimate, overshoot their expectations. It happens all the time. It happens with pretty much every single company. So Apple tells you they had this, if you're watching Apple events, the latest ones, now that Steve is dead, they say that they have this revolutionary new thing, a revolutionary device is coming, revolutionary software, revolutionary features, and then the event happens, and what do they have? They have new wallpapers. So they have new wallpapers, meaning they just overhyped the whole thing, to let's say raise the expectations and possibly even to inflate their stock price, to make people a lot more interested into something that is not really interesting. That's another thing. So Apple used to be the best company in the world when it comes to technology. They used to be heavy innovators, but now that Steve is dead, I think the last thing that they innovated in that was successful was the AirPods. So their last innovation was the AirPods. Yes, the stock prices is going up because they're increasing their price. They're offering new stuff that you don't need. They're offering a lot of subscription stuff. They're now implementing artificial intelligence and selling you more expensive phones. But I don't really like this company, if I'm being honest. I think there are better companies out there. This is just maybe sort of an investment advice. And I have my iPhone here, which is I think it's from 2021. So this is iPhone 12 Pro, and it still works like it's new. So there's no need to buy a new one. That's what I mean. So for Apple, I think it's going to be very interesting fundamentally what is going to happen in the future. I don't think the future is bright. Tesla, though, Tesla is innovating. Tesla, they released the self-driving taxis, so that should definitely be good. And some companies have started to outperform Apple. You have NVIDIA as well. NVIDIA has been crushing it with AI chips, with chips in general, and it is reflected in the stock price. This is the best performer in the last couple of months, maybe even last couple of years. Just absolute explosion. Yeah, last couple of years from 22, just a massive explosion up. This looks like Bitcoin. 1000%. This looks even better than Bitcoin. So this is crazy. Yeah, no worries, Yusuf. As far as EU and GU go, let's see the daily chart. So as far as EU and GU go, I know I have a trade running on EU, but I don't have a lot of confidence in it, if I'm being honest. I would like to get out, take something else. GU, same opinion. Actually, even worse. I think the pound is weak. I think the dollar is weak. And if you have both currencies that are weak, that doesn't really create trends, okay? So you need one currency to be weak. You need the other currency to be strong. So you need a weak currency and a strong currency. That's going to create trends. If both currencies are weak, no trends. If both currencies are strong, no trends. That is why, especially on the pound, US dollar, you're just seeing flat, 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 flat. You know, super flat, going nowhere. So I would say the pound dollar is my least favorite thing to trade, if I'm being honest. That's just my opinion. So Yusuf says AirPods. Yeah, AirPods last major innovation that was super successful. I still have my AirPods from 2018, 19. They were great. They work great. After that, there's nothing that they made that was a clear innovation. They made the glasses super heavy, super expensive. No one wants to use it. Do you want to really wear glasses that are like 5 kilos on your head? Maybe in 10 years it's going to be good, but right now it's not looking great. And Apple was never about being the first. It was about taking the revolutionary technology and making it affordable, let's say affordable, while also making it work seamlessly. Like the iPhone was not the first touchscreen, but it worked so well, it was so easy to use, and that is why it was so damn successful. Really sad about Apple. I used to love the company, but they are on the wrong path, and they don't have any innovators anymore. Okay, so Jason says, Marco, whenever you have time, I'm curious what risk you were using on Darwinx Zero Signal account, what your deleverage chart looks like, and what Darwin risk ratio you were assigned. So, okay, sure. So the best thing to not open now the account on the live stream, if you can just send me a message on my Discord. So if you can please go to, you don't have to stay in the Discord. Just find me on there, send me a message, and I'll take all of those things. I'll send you the screenshots, okay? So go to this Discord. It is the Zentum Trading Discord. Join, find my account, send me a message, and I'll send you all of this information. I don't want to waste too much time searching for all of this stuff. You're already on. Okay, great. Then just send me a DM. Okay. And also for any other viewer here, if you want to join Zentum Trading Discord for absolutely free, you can do so using the link in the description of the video or in the chat. But yeah, just a side note, the risk engine, what is the risk engine? If you're using DarwinX, the risk engine, if it is at X 0.5, that means if you take a 1% risk trade on the Signal account, it is going to translate into a 0.5% risk on the Darwin account. So the risk engine is there to make all of the accounts, let's say, the same risk-adjusted return, so that you don't have someone risking 5% per position and someone risking 0.5% per position, but both of them get similar risk at the end of the day. My current risk, it was 0.5x, now it is above 1. So DarwinX deemed my strategy a bit safer nowadays, so I think it's around 1.1. So if I take a 1% risk, wait just a second. If I take 1% risk on the Signal account, it translates into 1.1% on the Darwin account. So it's bigger, okay? Message sent, sorry for the disturbance. No worries, absolutely no worries. I'm gonna take a look after the stream. I'll send you all of the information. And yeah, good luck with the DarwinX. Give me just 1 second and I'll be back. Okay, I'm back. So let's get back to our analysis. Let's minimize this. What else do we have? I talked about stocks. I didn't talk about gold or silver that much. So that's my next thing. That is next on the radar. It's a sad game, to be honest. I'm looking at gold. I'm looking at silver. I missed it. I missed the entry. My game plan was to enter right here before the breakout. We never got a pullback. So it's a sad story. I can sob for days, so I can cry about it, but it's not gonna help me much. So let me tell you what I'm doing right now. Gold and silver does look a bit overextended. So very far away from the 20 EMA, as you can see here, very, very far away. I don't want to buy here. I don't want to buy the highs. It's not giving me a lot of confidence. We can take a look at what is the sentiment, let's say. So let's take a look at the gold. Institutions are long, retail is actually short. So that's great, But for silver, it's a bit of a different story. So silver, institutions are neutral, while the retail is short as well. Okay, short as well. Let's check the seasonality. Although seasonality is not going to work right now. For this whole year, seasonality was not great. So seasonality was not a clear indication because the regime has changed. You know, Trump came in, tariffs, crazy stuff, news every day, new developments every day, okay? So the seasonality is not gonna have much of an impact if you have this regime of crazy news, crazy days, crazy tariffs. But if we take a look, gold is usually a little bit positive in September. Silver is negative in September. So this is the average of last 10 years. This is called seasonality. It's pretty cool. Usually it works. Usually it works great, but not when Trump is in office. Tieren, where to buy gold? When? We are late long buyers. Yusuf says, what's your projection on gold based on fundamentals? Tieren, please don't say short gold. I'm doing this week a couple of times, very times significant losses. So I would never advise shorting gold. I would tell everyone to stay away from shorting gold. So this is the daily chart. And if you zoom out, look at this. This is really, really dangerous to short. This looks parabolic. This looks like an explosion to the upside. Look at the weekly chart. So catching short setups, selling gold is one of the biggest mistakes that you can make as a retail trader. The only guys I've ever heard that try to short gold is retail. I don't think there's any profitable trader. I don't think there's any institutional trader that wants to short this chart, because your edge is so much better if you just buy. So if you just decide to buy, same with the stock market. So buy setups, you get an automatic increase in your trading edge. That is why I would never, ever, ever advise going short on gold. I think 3,500 is strong support for manipulation next week. I managed to catch a buy on the 15-minute. Yusuf says, great, nice. Although I think we are very overextended here. I caught a gold scalp on 33.80 to 33.90, but not good reward to risk. Let's see. 33.80. Okay, so some are here. I wouldn't buy at this level, to be honest. I think this is now very overextended. I think this is sort of parabolic, and I think we are due for a pullback. So, yeah, basically maybe to here, but maybe even better to this level of support. So 358 to 359. Okay, cool. So 358. 8 to 359. Okay, so you recently caught that. And with NFP, we got an even higher explosion. See, so NFP came in much lower than expected, much lower than the forecast, which is bearish for the USD, and it is bullish for gold. So gold is just continuing to explode higher. I just think this is overbought. I think it's overextended. I wouldn't want to buy at these levels. I would expect, or I would wait for a bit of a pullback, a bit of a correction. What is my long-term projection based on fundamentals? It is definitely bullish. So let me just go and wipe my nose just a second. Okay, I'm back. Stupid nose. But we got it solved. So, bullish projection on gold. I think this is going to continue going higher. What is the reason? Well, the US economy is not that bad. I would say it's a good US economy. Overall, I think it's still pretty healthy. Rate cuts incoming. So, this sort of a scenario is super bullish for gold because it massively increases inflation. Inflation is already a problem. Look at the US inflation. Where is it? CPI. So look at the US rising. It is above target. Usually the target for most central banks, target inflation is 2%. Right now it's rising. The trend is higher. We are at 2.7. We're getting new data next week. Be mindful of that. So next week, September 11th, we are getting new data. Forecast is 2.9. Forecast is increase in inflation. See, even higher inflation. That's crazy. So investors are afraid. Hedge fund managers, investors, pension fund managers, traders, banks, they're all afraid of inflation. They have a lot of risk on positions. They want to hedge their positions. They have a lot of they have a lot of dollars. They have a lot of bonds. And now the story is most likely going to be they're going to sell bonds and they're going to go from bonds, from the dollar, from stocks into gold, into silver. Okay? To protect their capital, to protect against inflation. And guess what? Gold has been an even better performer, or it has been very close to the S&P 500. Let's check from January 22. Let's see, January 22 up to now, 102%. Let's check the S&P. So from January 22, let's see. See, 43%. So gold has definite outperformance to the S&P. Lately, gold has been the best major investment in the world, just crushing. And I'm expecting this to continue. Zoom out, look at the chart. Does this chart look bearish? Does this chart look to be slowing down? Does it look to be reversing? No, I don't think so. The trend is definitely up. So I'm really bullish. Fundamentals are super bullish. Bigger players are buying. That's confirmed. You can look at it in the COTS, so Commitment of Traders report. Technicals are super bullish. We just had a breakout. We just had a breakout of the high. Here, breakout of a key resistance, and we are continuing higher. Crazy stuff. I think we're gonna go higher. Okay. TRN says, yes, Mark, I'm very new to this stagflation market fundamental, as when I joined the market in 22, I suffered a loss on buy gold when the inflation keeps rising with bonds. Now, clear difference. Yeah, I would say now it's a clear difference because you have uncertainty in the US, which is another bullish scenario for gold. What is Trump doing? So Fed has always been independent. US central bank has always had independence from the government administration. Now, Trump is heavily influencing the Fed. He wants them to cut interest rates. He wants to fire Powell. He already fired Lisa Cook. He wants to replace Powell with his own guy that's gonna be more dovish, that's gonna listen to Trump, and that creates fear. That creates uncertainty. People are not sure what to expect. People think it's going to lead to a US that is not as good or as strong as it was when you had the Fed completely separate from the US government. There's a reason why I want to keep the Fed completely separate. You know, they need to respect the numbers. They cannot follow the politics. When the Fed or when any central bank starts following politics and starts appealing to the president, then it's a problem. And another rule is that when there is uncertainty, gold goes up. You know, when investors feel uncertain, gold tends to gain value. So that is why this is so good. You know, so good. I love it. I love this story. It's just the problem was the move already happened. The big move already happened. I can't do much. I can just wait for my pullbacks. So I had some pending buy limits, I think, at this area. So on the 2nd of September and here before this breakout, I had a pending buy limit. Nothing got hit, and now it's just flying away without me. So that is the story. Yeah, that is basically the story. Give me just 1 second. Looks like I'm catching a cold or something, but we're gonna continue. That's the story. I don't want to buy here. Overextended. I think buying here would be pretty dangerous, right? Pretty dangerous because your risk to reward is gonna be bad. So let's say you bought at this level, like this, you need to have a pretty big stop loss and you cannot have a specific target. But let's say you get a pullback, let's say you get in here, or let's put it here. So you get in here at this level of support, and now you can have a pretty tight stop loss, and you can have the first take profit at the highs. So compare the reward to risk. See? Same thing here. If you buy right now, you can put your stop loss below this one, but it's still above the 20 MA. It's still very likely that the price is gonna reject. It may go up a bit, like this, but sooner or later you're gonna have that pullback to the 20 MA. That's just a fact. See, overextended pulls back, overextended pulls back, overextended pulls back. Now when does it pull back? No one knows. Here, overextended pulls back, overextended pulls back. That's the danger of buying, let's say here. You know, let's say you bought at this point. You get a bit more upside and then a retrace, a big one, big retrace. So in order to avoid that, I am being more careful. So Tieran says, yes, market breakout resistance 3433 is now very strong high time frame support, but I don't know when it will hit. 3433, let's see, 3, 4. Yeah, this is a very strong level of support. I would definitely buy at this level. It would be very, very high probability in my opinion. It is close to the 20 MA. So if I get a pullback, I'm going to be in. I'm going to be hunting this level as a hawk. Absolutely. Hopefully it happens. Yusuf says, sorry, wish you a quick recovery. Yeah, no worries. If it's a cold, it's a common cold. It's nothing. But it's just that my nose is fucked up, which is not good for talking in the streams. Do you trail your stop loss when trading gold, or do you use take profits? I trail. So I trail my stop loss. So here are the trades that I took. And I trailed all of them. Okay. So I trailed all of these positions. Let me just go grab some water. Yeah, as I was saying, I trailed all of these. I usually trail on the daily chart. Sometimes I close prematurely. Sometimes I trail on the 4-hour chart as well. So general approach is, if the price is moving like this, and let's say I got in here with an initial stop loss, I just move the stop loss below the swing lows. Like this. See? Bam, bam, bam. And then once the market decides to switch like this, I get taken out. Okay? So once the market decides to reverse the trend, to kick in with massive bearish pressure, I get out. Now, if there's also some sort of a fundamental or macro development that is very bearish, then I may manually close as well. Okay, so I'm being careful. I'm monitoring the markets, but a trailing stop loss is so good, so efficient. And if you look at any swing traders, if you look at any macro trading hedge funds, most of their biggest positions, their biggest winners will implement a trailing stop loss. Okay, their biggest winners will involve trailing stop loss, because we are trend traders, so we want to squeeze out the most. in a trend. You want to squeeze out the most that you can. There is a difference that I need to mention between, let's say, you have assets like the Nasdaq, like gold, like silver, like Bitcoin, like Ethereum that just go up over time. Just go up over time, and your edge, you have a massive edge if you just buy. You know, if you just buy, there's like a 55 or 60% chance that you're gonna win because it's just moving up over time. With currencies, it's a bit different. Currencies, they don't tend to have trends over time. Wow, euro dollar is now actually going higher, steadily going higher. With currencies, it's mostly a flat range. See, this chart doesn't really go anywhere. It's just being flat. So currencies tend to move in these huge ranges, tend to move. Look at Euro GBP. Just a massive, massive range from, let's say, 2007 up until now. Just super flat, super flat. And that is how currencies move. So using a trailing stop loss is much more powerful on gold than it is on currencies. Because with currencies, they tend to mean revert. Meaning they move in a range like this, and then they have the mean, they have the middle of the range, and they return back to that mean, they return back to the middle of the range every few years. So you don't have an extra edge. That is why I love trading gold, because it's easier. It's definitely easier if you get in on a buy setup. And I focus on buy setups. I've never taken a sell setup on gold. I've never taken a sell setup on the stock market. I see some manipulation tactics by big players to lower gold price to brutal correction, but this is first time in my life I see gold maybe 8 to 10 days keep rising. Is it your first time to see this phenomenon? Well, yes, because I've only been trading gold since 2025, so since this year, but you know, we had this sort of movement happen. I would say this was pretty similar. I would say this was very similar in 24. See, March, April, huge explosion up. So this one, look how long this price action was above the 20 EMA, and we got no pullback. So from when it started to when we hit the 20 EMA, from when we started to when we hit the 20 EMA, it is 54 days. 54 days, that is crazy. Okay, that is crazy. That is 2 months of just huge uptrends, of just consecutive, let's say, bullish candles and consecutive momentum. Yes, I think that's why. Yes, I think that's why Forex is personally safer than gold, but I honestly can't keep up with different currencies' fundamentals. Well, it is a lot of information. It does you can get overwhelmed. There's so many things to look at, but I would say the Edge Finder makes it easier because you have all of the numbers, all of the information in one place. Okay. So yeah, with the Edge Finder, you just scan the top setups. Let's see, like this. So you scan top setups, or you look at things like the GDP, the unemployment, the inflation, and you get a pretty good idea. So you get a pretty good idea of what is happening, with the currencies. So yeah, if you have this kind of software, it can make things much, much easier. And also, if anyone wants to check out the Edge Finder, I think there's a sale this week going on, and you can get 45% off. Let me check. Edge Finder. Let's do it like this. Checkout. So if you use my code, which is MARKO, yeah, you're gonna get 45% off. So if anyone wants to check out the Edge Finder, This week, I think until Sunday, you can get 45% off. So the regular price is 1,400. Now it's 769 using my code. Just a quick diversion and a quick plug of the software. So yeah, if you want to help out the channel, take a look. These discounts don't come very often. So yeah. We're approaching the end of the stream. I think this was a pretty successful one. NFP, always a lot of things going on, always a lot of activity in the markets. So I'm pretty glad I had the live stream today instead of yesterday. TRN says, once I'm less overwhelmed with gold and I have time for trading, I will consider buying the Edge Finder. No worries. There's also a free trial if you want to check it out for free. You can find out more on the A1 Trading website. Okay, so I also wanted to do some other things. Let me see USD CAD. I'm looking at USD CAD for something else, for a buy setup, but it's not for this live stream. It's something that I'm testing in the background for now. So I wanted to take a look at some other things, and then I'm gonna wrap it up. What is the Dow Jones doing? It's pretty close to all-time highs, but not really moving. Russell, close to the all-time highs. It's probably gonna hit them in the next few weeks, especially with the rate cut story. So what you have to know is rate cuts are really bullish for small cap stocks. So for small stocks, rate cuts can be very, very bullish because the smaller stocks, the smaller companies, they don't really make a lot of money. So then they just take on a lot of debt. They take on a lot of cheap debt if the interest rates are low, and then they increase their stock market price, but most of them don't deliver. Okay, so they take on a lot of debt because it's cheap. They take on a lot of money. They spend a lot. Unfortunately, they don't deliver. What does that mean? Well, short term, it increases the price. Short term, you get a boost in price like this. So you get a boost and then you get a correction, right? After, let's say, a year, 2 years, 3 years, when the companies don't actually deliver and loans get more expensive. So the Russell could be the indice that is impacted the most by rate cuts. That is why I'm looking at the Russell. DAX is in the shits, so DAX is a shithole right now. It looks so bad. I took 2 losses trying to buy this stupid thing, but I don't like the Russell. Or sorry, I don't like the DAX. I like the US stock markets more. This thing just, it moved this year, but most of the time it's just so choppy. Just looks like crap. So not my favorite. Of course, if we do break out of the highs, I will look for buy setups. Until we do, I'm gonna remain patient. Japanese stock market looks interesting. So all-time highs breaking out, looking pretty bullish. So I will consider some buy setups. Platinum, let's see. Platinum had a massive explosion, big pullback. Now it's kind of ranging around. So not that interesting. Copper is crazy. Copper is impacted by geopolitics so much. So yeah, geopolitics play a huge part in the price of copper. That is why I'm just leaving it alone. So copper and oil are the things I really don't like to trade. Okay, copper and oil, they're so impacted by geopolitics. Like you had Israel and Iran, then the conflict dies down, then you had some Russia-US stuff, then it dies down. Now it's going lower. Why is the price of oil going lower? Because it is expected that the US economy will expand in the future. Lower rate cuts means more spending, means more money in the market, means consumers have more money, means demand for oil goes up, meaning the price goes down. Okay, so as the demand goes up for oil, that's not correct. if the demand goes up, the price should go up. So this is actually a sign of a cooling US economy, which is true because we had a bad NFP. So I got confused. So prices are going lower because US economy is slowing down. We got a bad NFP print. And this coincides with that NFP print. You can take a look. NFP, see bad NFP, US economy not doing well, we go lower. So yeah. US oil, as I mentioned, not my favorite thing. TRN says gold is very near to 3,600 psychological level. Yes, that is true. So that could definitely produce a bounce. What you have to know in trading, the round numbers can produce a big reaction because at the end of the day, the people that are trading the markets are human, right? So it's humans executing positions. Yes, there are some robots, but the robots are being controlled by humans. So they are being deployed by humans. They're being turned on and off by humans. Humans like psychological levels. So you like 3,000, you like 3,500, you like 3,600. So when someone has a sell limit, let's say, they want to sell, they may say, I'm going to sell if gold hits 3,600. They're probably not going to say, I'm going to sell when gold hits 3,000, when gold hits 3,587. You know, they're probably going to say, I'm going to sell when gold hits 3,600 because it just appears cleaner. So that's a cool phenomenon with those psychological levels. Okay, give me 1 second and then So give me 1 second and then I will wrap up the stream because we are approaching the end. So the last thing I wanted to cover is Bitcoin and Ethereum. I think we covered pretty much everything else except crypto. What is crypto doing? Well, nothing. So Bitcoin and Ethereum have been just flat. So just looking flat, just looking corrective these couple of days. I'm not that bullish on crypto. If you look at the seasonality, of Bitcoin and Ethereum, I think we can check out Bitcoin. Let's see. Not the scanner. Monthly. So yeah, September is negative for Bitcoin. You do have rate cuts. Rate cuts should be bullish because if the Nasdaq goes up because of the rate cuts, Bitcoin should follow. Bitcoin acts like a technology stock. But there's also the story of halving. So I'm not that proficient in crypto, but basically there's this story of halving, Bitcoin halving, and we are now in a cycle where Bitcoin loses value, where there's not a lot of interest around Bitcoin. So I do think the crypto story will quiet down a bit in the upcoming few weeks. I don't think we're going to get a massive bull run. I think we're going to stay at these levels. Ethereum just looks parabolic. I think there's going to be a correction on Ethereum sooner or later. This move has just been exploding higher with no pullbacks or with very minimal pullbacks. There's a lot of big players, a lot of institutions getting caught on the wrong side. A lot of weak hands have bought these highs. So I do think this chart is due for a bit of a bigger correction, a bigger pullback. Generally, my summary is I'm not really bullish on Bitcoin. I do think this upcoming period for, let's say, the end of 2025 is going to be a bit corrective, is going to be a bit flat, it's going to be a bit bearish for crypto. So my main focus, the best thing I have for you today is gold and silver. Top two favorite things, gold and silver. So let's see how this story develops. That's about it. Thank you guys very much for watching. If you want to join my or our free Discord, so Griff and I have a free Discord, you can do so. if you go to Zentum Trading, okay? So let me put this in the comments. You can find the link in the comment section or in the description of this live stream. If you want to get updates on when I'm live streaming, so if you want to get updates, follow me on Instagram. All of the updates about my live streaming schedule go on my Instagram account. So the handle is @MarcosTradingJourney. Okay, so that's my Instagram handle. Make sure you give me a follow, and that's basically it. So good luck in the markets. Do pay attention. We're not done yet. We had NFP today, but I'm still watching for PPI inflation and CPI inflation print. They're going to be very, very important. They're going to be crucial for the interest rate story. So no worries, Jay Sid. Thank you everyone for your comments. Thank you, Yusuf, TRN, Jay Sid. And if I missed anyone, I'm sorry. See you guys next week, most likely on Thursday. That's my regular day. So I usually stream on Thursday at 5 p.m. London time. And yeah, I think it's going to be great because it's going to be CPI next week on Thursday. So I'm going to sign off here and enjoy the rest of your day.